How are we getting on, people? Luke here from LAGFX. We are back with another Sunday Sessions video. In today's video, me and James are going to run over the markets, give you our analysis, our thoughts on the week coming, and give you some tips and ideas on what we can expect price to do throughout this trading week. Now, there are a few pairs that I'm personally looking at. I'm looking at the Euro JPY, Great British Pound to the USD, and the USD CHF this week. I'm going to quickly run past my ideas and go over the pairs that I'm looking at, and then I'm going to hand you over to James, and James is going to dive into the markets and give you his analysis and rundown. Now, if you do enjoy the video, please be sure to leave it a like. All the support that you guys provide is very much appreciated, and if you are unsure about any of the analysis that we've provided for you guys today, please leave it in the comments below and we'll get back to you as soon as possible. Now, without further ado, let's jump straight into today's Sunday Sessions video. So the first pair that I've got on screen for you guys today is the Euro to the Japanese Yen. As you can see, we capitalized on a lovely short position at the start of last week. That was great. We did the analysis for this on the previous Sunday Sessions video. So if you've not seen that, go and check it out. It's quite an interesting watch. This week, I am basically looking to capitalize on a similar thing. We are wanting to take advantage of its next bearish leg down, which I do believe is going to take place. Price has been trying to take this nosedive down and we keep coming back up to test this area. But I truly believe that it's underway. We are setting lower lows each time, and we are also setting lower highs. So this tells me that the market is moving bearish, but we are seeing large retracements as well as large swings down as well. As we can see, price has set a low, come up to set a lower high. It is lower than these highs. So this is following bearish structure. This is following the structural laws for bearishness. We have recently seen these lows being set in the market here. With this being a bullish retracement, we can expect highs to be broken and the lows not to be broken. We have just recently experienced the lows breaking, so this could tell us that price is looking to move bearish. Price is looking to take its next leg down. So now would be a good time to look to jump in on those sell positions. If we go down time frames, we can see this a bit more clearly. So we've seen a low set here. In bullish structure, we can expect a low to be set, a high to be set, a higher low to be set, a higher high to be set, and a continuation in this bullish manner. We've obviously not experienced that. We've had a low set, a high set, price has come down, tap into this same low. It's then gone on to set a lower low, so this is showing bearishness. Price has then gone and broken structure. This is a break of structure here, as price has actually broken these lows. So this confirms bearishness. This here looks like it's been a bearish retracement, and now we can expect a new lower low to be set. Once this new lower low is set, we will wait for price to retrace, set a new lower high, and this will be exactly where we enter in on the market. When we look at entering in on positions, we want to get in on the start of those impulses rather than the start of retracements or the end of an impulse. Just because once we enter in on the market, price will then take its impulse and we are instantly in profit, and it just sets us up well for the rest of the trade. So you might be thinking, well, if my predictions are for the market to move lower, why aren't I entering in straight away in the market? Quite simply because we can expect price to come back up. So I don't want to set my short position here, for example, with my stop loss up here, and obviously my take profit at a previous level of demand, just because price will trail up. Yes, it might not trail up enough to tap us out, but it's putting us in a drawdown. I would much rather get a better entry, so somewhere up here after price is retested, allowing us to have a really refined stop loss, and then we can have a larger take profit, giving us a better risk to reward return on the trade. So just to summarize with the Euro Japanese Yen, I am biased to a sell. Price is still moving bearish. We have already capitalized on a sell position prior to this, and I am basically looking to capitalize on further sell positions throughout this week. Now moving over to the Great British Pound to the US dollar market, we can see how we have marked out the protected high. We had the previous low. This low had been broken. So if you remember from last week's Sunday Sessions video, I said how I wanted to see price retrace and then go on to set its next impulsive wave down. If you didn't see that on last week's Sunday Sessions video, here's the footage. Could definitely look at placing a buy position and having an area or a parameter set like this, and then look to take a close once you see, you know, structure failing to produce bullishness. We could look at taking a close at that point, but this would be a good area as a rule of thumb and to look out for. But yeah, come in on the open, we could look at placing those buy positions. So we would realistically want our stop loss below a structural low. So we just get our position. This is just to show you guys an example of what we could place coming Monday. We could have our stop loss below this structural low here. We could have our take profit, say at the 50. So obviously our predictions have been very much correct. And I am basically wanting to see price now take this next impulse down. We did manage to capitalize on a lovely long position, so a buy position. So basically the buy before the sell, as we expected price to come to tap into this Fibonacci level, which it has done. It reacted perfectly off the 50 ratio. And obviously now we are looking for price to take its next leg down. Now, what are my thoughts for the open on Sunday night? Well, I believe we are going to see a continuation in bearishness. Price is going to come lower, setting a new lower low, and then we should see price retrace, setting a new lower high, and then structure should continue as follows. Now, how can we look to capitalize on this market? Well, we can go down to the fractal structure and we can basically look for breaks in these lows. So what we can do in that case is set our stop loss above this swing high here, and then we can set our take profit at a reasonable position where we believe price could reach without retracing. This analysis for the Great British Pound to the US dollar has been quite brief, but I'm just giving you the direction of the market, the direction I believe price is going to go in. And as you have just seen from earlier on in the video, I've shown you proof that my predictions do come true, and we are quite good at predicting the direction of the market. It's just about being able to capitalize from those moves. So again, now that we've seen price come into this fib box as predicted, we've seen the distribution, the break of structure, price moving lower. We can expect price to break this low here that's been set, go on and to continue that bearish structure. We are looking to capitalize on those sell positions, so we are biased to a sell. Now finally, we're going to move over to the US dollar CHF, and I'm going to leave you here with an undecided bias. So price has trailed up in a bullish manner. We have a high set here. Now price seems to be ranging within this area, and price could do one or two things. We could either see a continuation in bullishness, breaking this high, which would then confirm further bullishness with the higher time frame structure. If we look here, price is very much bullish, so we would typically be looking for those buy positions. Alternatively, if we see displacement and a break in this bullish impulse, then we could be looking for those sell positions. Yes, we are trading against the trend, which is against the rule that I follow, but it doesn't mean to say we can't capitalize on what could be a retracement or the start of a new bearish trend on the higher time frame structure. Now again, how do we look at capitalizing on the USD CHF? Well, what we need to look for in order to capitalize on a short position is a break in this low that's been set here. If price was to break lower than this low, like so, this would confirm bearishness, a reversal in this current bullish trend. We would expect a retracement. This is where we would enter, and then we would ride the next impulsive wave down and continue to ride the impulsive wave down until we seize fit. Now the alternative is price continues bullish. If so, we would expect price to break this high, creating higher highs and higher lows. So we'd expect price to come up, come down to set a higher low and continue the bullish manner. We could look to enter in here on the end of the retracement after we have seen a break in bullishness, and we would follow the trend up, having the built up bias with the overall structure of the market and other pieces of confluence. So again, with the USD CHF, it is undecided, but this is a pinnacle point. Like I said, if price breaks these lows, this could be confirmation for us that price is moving bearish. Alternatively, we could follow the trend if these highs get broken, as it would be confirming bullish structure, a continuation in bullish structure, and we would just look at capitalizing further on those buy positions. Now, my segment of this video has been quite brief, but I have gone over 3 pairs, so we are biased to a sell on the Euro JPY, as well as the Great British Pound to the US dollar. And as I've said, USD to CHF is undecided, but I do believe we could see a break lower and we could be looking for those sell positions. So just hold tight. If you're not in the Learning Lounge group chat, get involved. It's completely free. Reason being is we'll update our analysis on these 3 pairs over in the Learning Lounge group chat. That way you are able to take full advantage of the positions that we are placing as well. Now what I'm going to do is hand you over to James. He's going to run through his analysis, his bias on the market, and give you some tips and tricks on how you can look at making some money this trading week.
Hey everybody, hope you're doing well. Hope you've enjoyed Luke's analysis, and now I'm going to dive into some of the markets I'm looking at now. Usually in these videos I do a very quick rundown of a few markets. I don't really show you how I've analysed them, rather I just show you what it is I'm looking from the market. This time I just want to take a slower approach, sort of strip back the layers and show you how am I actually creating this bias, how am I doing this analysis in order to make the predictions from. So I'm here on the euro to the US dollar market. Now this for some time has been bearish, and as you see this move up, so the bullishness we were experiencing a couple of weeks back, I believed was going to be our correctional wave in order to take us back up to one of the zones up here. So one of these 2 supply zones. In my eyes, these areas ideally needed to be mitigated. So I was looking to try and trade this market bullish all the way up until at least this first zone. Now the reason we know, or the reason I know that is unlikely to happen now, is because what's happened is after the midterm bullishness, we then broke this protected low, so the previous correctional wave when that set the low and it became the protected low. Price actually ended up trading through it, disregarded this demand zone. But then what gives me that full confirmation that we are continuing bearish from now is because we've broken this structure. So the low that was previously set has now been broken. So what we can expect is that in the higher time frame scheme of things, this is now a protected high, and what we're going to see is when price is done with the impulsive wave lower, it's then going to look for a wider scheme retracement or correctional wave like it's done here. That's going to be bullish up until one of the zones higher. So if we go back down to 15-minute and really zoom into this, we can see that overall this is our move down. So this to me so far is a blue box because this is the impulsive wave lower. So make sure we get that right at the end. So that's our step 1, that's our impulsive wave. Now inside of this, in my eyes, there are a few different zones we can look at. I do quite like this one, but it all depends how much demand is introduced into the market. It may get to a point where there is that much demand that we blow through all this area, run all of these liquidity highs, and then mitigate the highest zone. On the flip side, if price struggles to really introduce enough demand, it may then be ideal to actually look at this zone. The reason this one's quite nice is because we have a last buy to sell, some market inefficiency in this region, and on top of that we've got a huge area of liquidity. Now typically when areas like this are getting built up, when liquidity is built like this, then it usually shows signs that in the near future the smart money operators are actually going to look to blow through this, clear that liquidity in order to manipulate the market. So my bias is that we need to see some form of displacement of the bearishness, and until we have that, we're going to assume that bearishness is to continue. So as of right now, in the fractal scheme of things, this is our protected high. So as of right now, until that high is broken, we cannot assume that the correctional wave is being put in place. We can only assume that price is still going to be bearish. So within this move down, which in itself is an impulsive wave within this bearishness, or the more fractal bearishness, we have 2 unmitigated zones here. Now it's a very inefficient market in this region, so I am expecting price to want to retrace up, potentially mitigating either one. We will look at both for sells. Now this is going to be a pivotal point because price is either going to mitigate these, continue lower, in which case we know that the impulsive wave is still in control, supply is still in control, we're not yet ready to reverse, or price is going to break this high, and at that point we know, okay, we want to then be a buyer in this market. We want to look to go on long positions because it's likely that price is then going to trade us up into either this supply zone or this zone higher. So my bias really is going to be short-term sell, so continuing to look to ride this impulsive wave down. However, it seems that evident by this liquidity, evident by the consolidation. Supply is beginning to diminish. Price is going to struggle to continue with this impulsive wave for much longer because there just isn't enough supply. Unless we have some outside external factor introduce that for us. Looking quite simply at the markets, I'm going to say that the impulsive wave's coming to an end soon. So we're going to have to be careful in this region, because is there going to be enough supply to actually continue this impulsive wave, or are we ready, as I said, to break some structure and then continue higher to put in a correctional wave? Now moving on over to the Great British Pound to US dollar, very similar market. We are bearish longer term. You can see that just on the left, obviously I have an impulsive wave down, point of interest, some Wyckoff where we have reversed the market, we've distributed. So we could have found an entry on that sell, and then eventually price slowly traded down, broke the structure, and what happens here is that ideally this becomes the protected high in the scheme of things. But I noticed that within this, obviously we probably have some unmitigated positions up here, but I did really like the look of this region here, just because evident by this box I've marked up, we have a very nice institutional footprint. Now in my eyes, price was very likely to just come up, mitigate the footprint, and then continue lower. Obviously you see here I was looking to take trades from it. Some added confluence on price wanting to do this was these areas of liquidity that we had built up, an accumulation here. So obviously we accumulated the market, introduced demand, manipulated downside liquidity, and then made a heavy run higher, where we've then come to clear both areas of liquidity in the market, then come to mitigate this institutional footprint. We could have refined that to the exact candle. You see it actually taps in quite perfectly into that before reversing. Now I just want to run you through some of the entry opportunities we were looking at. So to anyone who understands Wyckoff, this isn't a very clear distribution whatsoever. However, I was trying to remember the main principles, those being the fact that we need a displacement. So in my eyes, this was, or it should have been, a protected low. So the second we had this break, we could then watch to see how the market reacts. What's happened is after the break of structure or the displacement, price comes to create a lower high. So this was the high in the market. Price does not exceed that. And after being unable to exceed that, the next impulsive wave down has come to break structure again. So we were making the assumption that this should be a protected high. And then this down here is going to be our midterm final target. But obviously because of our higher time frame bias, we understand that price wants to continue trading down to the final target lower, which we can check out in a second. Now I was nearly caught out, just because as you see that ideally here, this point here is where I thought we were going to get the reversal. This is exactly where I entered in on the market. Now I did actually refine the stop loss on one of my positions to this high. So one of them did get a stop loss hit. Luckily on the second position I had running, I was a bit more lenient with that. I had the stop loss above the previous high with an extra pip, 2 pips on top, just to account for spreads or anything that may happen like this. And thankfully, because our spreads are so low with AxiTrader, I wasn't taken out of the trade, even though we did come very close to stop loss, and then ended up profiting quite nicely. But we'll dive into that even more in a second. Moving forward, the fact that we've had a very big push through like this, which has come to clear some liquidity, which has come to manipulate the market with high volume, and then even with added confluence, straight after doing so, we've then had a very heavy push lower. This to me is definitely an institutional footprint. Now ideally, I would like to see price trade back up and mitigate this. It doesn't have to, but in my eyes it would make sense. So this is definitely a point of interest that I want to be looking at. I would like to see price come up to this region and mitigate it, where we can then look to get in on more sells. So just to zoom out a little bit, obviously this being the spring in the accumulation, this being the low of the impulsive wave. So this is going to be our final target, with the expectation that price is going to continue bearish. We want price to exceed this final target in order to put a lower low in the market. Now there's two things that could happen here. Either price is, or price has enough supply to just trade us down, blow through the final target, and then we'll see a correctional wave come in. Or what's going to happen is, evident by a bit of consolidation here, demand's entering the market, we need to introduce more supply. Now on top of that, we have a very inefficient push down, so it's likely that price is going to come back through, clear a lot of the liquidity in here, actually create a more efficient market. If so, this is definitely the position I'm looking for. So I would suggest looking at this region for sales moving forward until more structure plays out, or price delivers a different bias to us. Now over onto the US dollar to the Japanese yen. this has been a market that has been heavily rallying massively for a long time now, and in my eyes it's probably only ideal to look for long entries. Now, I have been waiting for some displacements because I thought that price was in a very heavily overbought stage. I thought that surely demand is going to diminish soon, and I was looking for some displacements. I was looking for some sell opportunities, some of these looking like major distributions that could take price lower. However, that has not happened, so I am just going to try and continue to ride this bullish. Now, as of right now, what's happened is because we've broken a high, this becomes the protected low, this becomes the final target. I'm going to expect that price is now going to put in a correctional wave, mitigate one of these two positions before then putting in another impulsive wave higher. So we can look to try and sell price down to these zones, and then once price mitigates, reverses, displaces, then look to be a buyer to take price up to the final target. So on the lower time frames, I've been looking into this region because I was looking for some intermediary sells. You'll see that there's quite a nice area here where obviously supplies entered the market. We've had a distribution, we had the break of structure. After that break of structure or displacement was delivered, we could then start looking for sell opportunities. This was the last buy before the heavy sell-off, clear institutional control. Price traded back up, tapped into this before reversing, and I'm now expecting price to continue lower from this point. Now, obviously price didn't exactly hold the zone. It did blow through slightly. Now, this doesn't always mean that it's a break of structure. Sometimes we do have slight liquidity grabs like this. Unless it's a very clear break, I wouldn't bother yourself too much about it. And to me, this isn't a clear break whatsoever. So from here, ideally, we're looking for some sells. Now, just a little tip that I have been seeing on some other people's channels, some other people that trade smart money concepts. Now, ideally, we're looking into this zone, and this is the most recent impulsive wave higher. Now, if we're wanting to be a seller on the correctional wave, ideally, we want to be getting involved somewhere within the top 50% of that, because once we start going lower, it becomes less and less likely that that trade's going to play out because we don't know where it's going to reverse. Obviously, understanding the law of mitigation and order flow, we do ideally want it to mitigate down here. However, that's not always going to be the case. Price is not always going to mitigate the zones we want it to, so we have to be prepared for any scenario. In that case, it's usually ideal to get involved with price on sells in this case when supply is clearly dominant. As we start to push lower, supply becomes less dominant, the likelihood of that sell playing out becomes less and less. So this is quite a good tool to use. All you do is you customize this. So once you've drawn it out, you just double click, get rid of all the time levels, but with the price levels, just keep 0, 0.5 and 1. And I'm just looking to take any sell positions, ideally from this top 50%. Once it penetrates through, I'll say to myself, okay, we've missed out on the opportunities. We can now look to go long when price mitigates lower. Regardless, that is going to conclude this week's Sunday sessions. I hope you've enjoyed the video. I hope you've been able to take a couple of things away. Now, make sure you are a part of the Learning Lounge because, as we say every week, we update this analysis regularly. However, if you do want to take your game to the next level and see exactly where we're looking to enter the market, potential entry points, exactly how we look to execute, and even more in-depth analysis and analysis techniques, I would definitely look at starting in the main group chat because that is honestly where you can take your trading to the next level. Regardless, I hope you have enjoyed the video and we'll see you next week, next Sunday, when we have our next Sunday sessions video.